In this video, learn how to profit more on a profitable trade. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, a senior trader, Justin, from our desk, teaches a developing trader during an in-depth trade review how to make more in his best trading ideas. Specifically, Justin teaches this new trader how to trade around his core position to squeeze more out of this trade like top traders do at our firm. Let's get to work on sharing this important trading lesson from our prop desk so you can grow your trading account.
So essentially, this was an all-day fade play that I was playing. It's just mainly how I go about identifying all-day faders. So just the overview, we're going to go over the best candidates, narrowing it down, chart breakdown, executions, and improvements for the future regarding these plays. So essentially, the entire aspect that everything this revolves around is essentially identifying stocks that will do me the least amount of harm. And that's what I use for the all-day fade play. So majority of these are on small caps that I use. Essentially, they're and all small caps have poor financials on average, or majority of them do. But that doesn't necessarily mean it's going to be all-day fade, obviously. So I try to find the run, so the runs to the litter, essentially. A lot of what I do is checking SEC filings. I spend a lot of time researching on different stocks and what correlates with all-day faders. So from my own data, especially, I just found high correlations with negative EBITDA, EPS, book value. Those are my three favorite. And obviously, a needed cash is good because that could be a dilution play. A negative net working capital as well. That there's another form, or like a quick ratio less than 1. That also represents a need of cash. And the split adjusted price less than the current, that just gives me an indication that they have diluted in the past, and it further reiterates the point that this company probably isn't that good of a company. So this is what I look at each day when looking for ADFs. It looks like a lot, but all of it's automated. So you may be thinking, how do you fill this out in time? I just essentially just type in the ticker, and the news comes up for me. All the stuff comes up, everything except for like the pink, the purple pink colors, those I have to fill out on my own. And for this, it just had a shelf, not an ATM. So I did that. And this scores it for me as well. So this is like around like a B rating play, but the price action was very good on it. So as I'll show you in the next few slides.
Okay, so you're giving the company a grade based on their fundamentals. So A, B, or D?
C, I don't even play really usually.
Okay, got it.
So like this one, for example, is B because the gross profit trailing 12 months is what that means. The TTM is you see it's the one green box here. That they had a gross profit, but the recent gross profit was less by a significant amount. It's per quarter, that's why it's in yellow. And this bottom right thing you see, the listing recs, that's just the Nasdaq listing requirements. So that's usually if a stock is very poor and it doesn't meet the net income, the book value, and the MVLS standards, then I'll factor them into the play. But this one, as you can see, it says it's safe. So that wasn't part of this play. But it's just something I factor in usually into ADFs if they need to push the price up or reverse split or something along those lines.
So I think it's great that you're looking through all the fundamentals and getting a feel for the company. But I just want to stress that price action and volume are always going to be king. But on the other hand, doing that research could give you the extra confidence to put on more size and risk up these trades. So I really like that.
Yeah. I'm not just showing off the open or anything. It's definitely a lot of these I end up avoiding because the price action doesn't agree with my thesis. It's just so I can develop a reason to hold for longer rather than just like an extension that I would cover a little bit earlier, if that makes sense.
Great.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So usually like the stocks must be a small cap. I usually never go for these all-day fade plays on mid caps, essentially because the company, it tends to be better as a mid cap. And I can find the runs to the litter in the small cap realm. I do like bag holders on daily, which I'll show you charts for that later, because that bag holders on the daily or a high volume day that occurred previously, that's extra shelling pressure that can occur, and that just adds to the short thesis. And on the next slide, we're going to go through like the price action. So the backside candle, there was a backside candle with high volume. The higher volume trade at the highs, so all that liquidity that occurred at the highs will not be selling as the price goes down. I also enjoy when there's a liquidity gap, so the price extends quickly. That gives less time for bids to stack underneath. Whereas if something grinds up, there's a lot of bids that are stacking. There's a lot of time for people to set orders and stack the bids there. And there was no clear manipulation shown in this ticker regarding price action. So that was a key, because manipulators tend to keep the stock up. They lock the float. And in this case, that there wasn't any signs that I noticed. So that was an A-grade variable for this play. And again, just the poor fundamentals throughout. EBITDA, EPS, cash. EBITDA, EPS were both negative. Book value wasn't. I usually like when all three are. And they were in need of cash.
So you're identifying manipulation by bid stacking and how the stock is grinding and trading? Is that how you do it?
No, that's not how I identify manipulation. It's usually on small caps. I notice it a lot where there'll just be like a random fake breakout or a random rug pull, and that it's not just once, it has to occur more than once. Maybe like 2 or 3 times, but usually I'm pretty good at identifying when something's manipulated just through the price action. Just because if you think about it, a lot of the times not like there won't be like 1,000 buyers or sellers congregating at one price and all selling at the exact same time, causing some massive rug pull, some massive pull or wash. Usually it's one big player that is throwing the price around because they've locked float.
Yeah, and a recent example of that would be CEI, right?
Sure, yeah, that's one great example of one. Or like Grom today was also manipulated in my eyes, or GROM.
I agree with that. I traded that today.
Yeah. So the thesis, stock had bag close on the daily, fundamentals were poor, extension was clean, and the overall move was large enough to take advantage of. So all the all-day faders are put through like a rigorous process for me. And it looks like it takes a while, but it doesn't actually. I can probably get all that done in 5 to 10 minutes, depending on the setup. Sometimes if my automated sheet doesn't work perfectly, I will go into the filings myself. I also have to do that anyways to check for past dilution or current ATM or warrants, etc. And the market cycle is very significant in small caps. The one thing I've noticed is small cap markets don't correlate with large caps that often. They tend to have their own cycles, and they switch pretty fast. So right now I'd consider us in a weak cycle. We're in October, early October, but prior, during this trade, we were in like a neutral, somewhat neutral or strong cycle. We were in a neutral one. We just came from a strong one. So ideally for all day fades, they work better in weak cycles, just because it's more supply heavy. But this one is still neutral, so I thought it was still worth the trade, and all the other variables were lining up. And in order to track whether I'm in a strong or weak cycle, a lot of people just do it just by feel, or I guess how things are behaving, how many runners there are. I like just to do this tracking every day, and it doesn't take very long because, again, it's just automated. I just use Interactive Brokers data, and it just, if something was a day 1 or day 2, the number of gappers above 10, 20, number that gained 10, open to close, etc. That's just a good way to gauge what, like, you have like a basis point. You can just gauge how you can gauge how things are now versus before.
Yeah, and we're lucky to have technology where you could make a filter in probably less than 10 minutes that will just show you all the low float runners of the day, and you could keep track of it that way.
So here's the daily price action. As you can see, there's a macro downtrend as of recent, and the prior gap up behavior is a key variable that I look for. It indicates and this here indicates possibility of bag holders from prior days to act as further supply. So as you can see, there was asymmetric volume all throughout, and there's weeks of low volume as you can see down here in this chart. And then we see another micro downtrend here. And then this was the day that it gapped up. So there was obviously a lot more volume here. This is just how small caps tend to behave, just these random high volume days on these gap ups, and a lot of them come back down. So this one we see a constant pattern of them coming back down on the backside of the daily move. So that was another just added plus, and it just gave me conviction that there were bag holders on the daily at higher prices.
Right, and can we just pull up the daily chart and zoom out a little bit? Because I just think that is really important for this particular stock. So just real quick, in February, you could see that it ran to, what is that, 385?
Yeah, 3.
And we also see a clear blow-off move there, right? Like that day that it traded to 385, it traded 150 million shares.
Yeah.
So that's about, all those other volume bars that you see there are about 50 million shares. So that day it did 3x its, previous highest volume days. That's also when the meme stocks were running, like we just mentioned. So what do you think? There is just a ton of bag holders up there, right?
Yeah.
So when the stock pops into 3, when was that? A couple months ago?
Yeah.
What do you think's happening there? All the bag holders that are left from up there are selling into that. And the volume, it just can't compare to the volume that it did in February. And it fails from that $3. And then once it starts that downtrend, I think that is just really clear information that the stock is just finished. And each time it has a pop, you should be looking at technical levels, resistance levels, even looking at like a 4-hour chart, looking for important levels from when it ran in February, and any pops that you see into resistance levels should be shorted, especially for your strategy.
That was a thesis of like this 169 level right here. But I tend to use, I don't tend to use levels like, for example, this took out liquidity here. So I wouldn't use any level back here. And this one obviously does make sense that like, I'm assuming VWAP or break even price was somewhere around this. If I were to guess, I don't have it up. But that is what probably, like what, as you were saying, like the bag holders are all selling once the price gets back to where they had originally, near where they originally bought it. Just how human behavior works.
Right.
So that sort of occurs here as well when they get another opportunity to, like, obviously for a loss, but maybe people from up here, around here, are still selling into this pop here, which is the day that this thing gapped up.
Yeah, and if you look at that 180 level, which your trade popped into 180 that day, you can see it acted as support, it acted as resistance all throughout February up until now. And I just think that is just a really key level.
Yeah, I've definitely seen people use that. Just personally for me, once this move happened, I ignored all of this almost. Besides the significance of things, besides the significance that a lot of these moves failed. But I just assume to a degree that a lot of this got taken out. And now there's new positions held here that would affect it. But yeah, overall, the thesis, I definitely agree with what you're saying. This is the intraday price action. Essentially, I'm very particular with my extension moves, especially on small caps. So I'd say I do need a majority of bull candles over bear candles, and that was affirmed on this. That was just confirmed on this extension. And I enjoyed that there was a backside red candle on high volume, which occurred right here, right there. So there were 10 bull candles in the structural, 4 bear candles, and this is the entire structure that I counted. So starting from down here. And essentially this quick price move, as opposed to like a long grind up that would have taken a while, I like the quick price move because there's less time for bidders to stack their orders here. So it's easier for the price to fall down on the back side. That's definitely the key variable I needed with regards to price action. I need a clean extension and no time for bidders to have orders there. And then on all day faders, if you've identified one and you're confident in your play, then you have to recycle and short on pops and cover on the washes. That's just the only way to increase our output on these. Sadly, this one was high locate, but the play was there, so I had the locates were pricey, but the play was there, so I did have to take it. And here a floor was created, and I'll show you my executions later. But once this weakness sets in, that is just where I wait for a wash of this sort to occur. And that happened here, luckily. So in terms of price action, this is like probably A- or A-ish grade. I was really happy with it. The volume wasn't too high, but there's pros and cons to that, because when the volume's lower on small caps, it tends to be not very easy, but easier to read the tape. Things are much more clear, at least to me. But not to say that it can't be used when there's high volumes, but it is easier and a little bit slower paced when the volumes are lower. So here's the execution. Overall, I was happy with the execution. I definitely on extensions, I tend to short front side and then add on the back side, just because that's where I found the higher, not win rate, but R's. I'm generally able to get more R's out of a play. So risk was tighter since the backside candle came in. It was far different than any other candle we saw in the extension, and it was on high volume, as you can see. The risk was high a day. I usually keep it a bit above high of day, but for this one, I just put it right at high a day just because the backside candle was so large. And then I shorted on the first pop that I saw and kept adding to my short. So again, I emphasize the point of recycling on all day faders. So here I covered 1/3, I added a third, and that process just kept occurring down here. I added back again and the risk is usually just the previous lower high. So that's what that was a thesis on each of these. And then here, this floor that occurred right here, that's where I waited for the wash to occur to cover. I was actually upset with this cover because it was a little late. I was hoping for a little bit more fade after. Once I saw that it had some volume on that candle and it brought the price back up, I decided just to take the whole position off. And yeah, just something to improve. Again, like I said, I took too long to cover there. It's something I should have realized earlier, but not the end of the world. I just thought I needed a better system with regards to the end of the play regarding targets. So again, I just said something, I just told a note to myself, like if A happens, then I'll do B. If X happens, then I'll do Y, else sit pat. So I should have sat pat a little bit and maybe let it go to here or just covered earlier. That's just something I need to, there's going to be variability in that, something I should go over. This was sadly only a 2-hour play. Usually these are much higher just due to the recycling. But the locate fees were so high that it brought the R amount down. And I just went a little bit lower size because of how high the locate fees were, and the fundamentals weren't it wasn't fully an A grade play. It was more like B+ or A-.
Okay, and just about the locate fees, I think that unless they're ridiculously expensive, I think that you just need to look at it as a cost of doing business. And I don't really think that should ever stop you from putting on a trade, unless it's something that just doesn't make sense price-wise.
Yeah, fair. Yeah, that's true. And obviously it didn't fully stop me here, but it was something that I factored in. I essentially just view them as like my average just at a worse location, essentially. That's just how I view locates. And it just ate up on my R's a little bit. It probably would have been a little bit higher with regards to R's, but not the end of the world.
We talked about that 180 level, and it's failing from that 180 level. And like, if you just look back at that 180 level on the daily chart, you don't have to do it now. You see it spikes into 180 off the news, fails. And then in the pre-market, when it gets back there again, it makes a new high, but it just makes a new high by a couple cents and fails again. So it's a failed follow-through move in my eyes. It's not really a significant new high at all. And I think that's a bearish sign. And I think what that move could have done once it failed by a few cents and had that failed follow through, I think it could have attracted more shorts. And once it drops out like that off the open, shorts are thinking to themselves, okay, we got this in the bag. It had the double top in the pre-market. It had the failed follow through move. And then what happens? They all have their stop there at that 180 and they get stopped out. And then it has the flush. So I really like your entries there. And I think that what you could do, I think you could risk that up and just say to yourself, okay, it had the failed follow through momentum, can't hold above 180. Each time it makes a new high, it's not making a high by much and it's failing. So what I'm gonna do is I'm gonna put on full risk here and I'm gonna risk a hold above 180. Just an idea. But I do love your executions. I love how you're shorting each extended pop. And covering dips and trading around a core. That's great. These executions are really clean.
And yeah, it was definitely easier due to the lower volume. So not too much credit to myself, but just reading the tape was a lot easier on this play for sure.
And last thing, I'm not sure that I completely agree with your first cover. The chart's a little far away from me, but it looks like at that time, like almost at that exact point, the stock was going red on the day. So it's making a green to red move, and that can cause some panic. So I would just challenge you, if that happens again, to hold just a little bit longer and wait for a more meaningful flush.
Yeah, understood. Yeah, you're for sure right on that. That's something I could definitely improve on. But it definitely, I was just happy with this ad again on the green to red level right there.
Yeah, that's a beautiful ad.
Thank you. Yeah, so I mean, again, just the only thing you were saying about the 180, yeah, I just wish I added on the front side of the move. That's just something that's how I tend to play the extension plays when I see high volume up here. And that's just one thing I'd say for myself, just to work on in the future with regards to execution here. So yeah, just to wrap up, how to improve further. I would like to size in more. This is probably like B grade size, but it definitely should have been like B plus, a little A minus size. Definitely just should have been higher. The first pop is key. That's where I should have done. That's where I should have maybe increased the size of my position. Just when I saw it was the full backside of the move, so I could have made up for the initial lack of size. What I'm saying, but it just was a little difficult mentally because I just see. Sometimes manipulators pick these up a little bit later, and I just mentally I got a little flustered there. And then again, just like I said earlier, scaling it on the front side, I didn't happen here, and I personally like waiting for the confirmation, but that's not how it should be done in this trade. Extensions, I like scaling in on the front and adding on the back side if need be, adding and covering obviously, but this is an all-day fader, not just a regular extension. At least I identified it as an all-day fader initially. That was the thesis. So scaling it on the front and back side is the way to maximize the R outcome as well, with along with recycling.
Right, and just to chime in about the manipulation, I think one way to measure that is simply if R vol is increasing. Typically when the stock has a run in the morning, it tends to fade and R vol decreases. But if you notice that in the middle of the day, the R vol starts ramping up, that could be a signal for you.
Yeah. I use something similar. I made like a volume forecast indicator type thing. I don't know if you ever heard of something along those lines.
Yeah, I have.
Yeah, so I just made one of those, and I just based it off. I made one on all day faders. So essentially, the volume in all day faders should trade, and the volume shouldn't increase midday. So I just made, depending on the first 30 minutes of volume or first 15 minutes, I forget what I used. I just was able to make a prediction on what the volume should be later in the day or throughout the day by 4 p.m. essentially. But that's what I use. So essentially the same thing as you're saying with regards to R vol. That's what I use to confirm the hold on a play like this as well.
Really nice playbook, and This is a trade that you can make a career on. Just these backside trades and identifying when the stock is on the backside, shorting pops into higher time frame resistance levels. You could make a career on just this one trade. So really well done, really nice playbook.
Thank you very much.
Do you take into consideration whether these names are easy to borrow or hard to borrow, if it's going to fade or run on the day?
Not as much. I used to in the past, but I didn't see an extreme correlation with that. I used to track that actually, but I didn't see a huge correlation. Nothing that excited me much. But I guess you could argue that if it's easy to borrow, at least maybe the front side of the move, like if we go, maybe this front side of the move could have extended even further. But I still believe the backside candle would have acted the same way it would. Maybe I would have taken some cuts, to be honest. If, by your logic, if it was easy to borrow, it would have gone higher. And I wish I had scaled front side still, even if I had taken those cuts, just because that's how I usually maximize my R output, even though the win rate may be a little bit lower. But I did factor that in more in the past, but less so now. It's still in the back of my mind, but not a major part of my thesis at all.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.